My name is Alvin Brown. I'm a tax attorney. I'm with the law firm of Alvin Brown and Associates. Today I'm going to talk to you about the right of the IRS to levy your wages or to seize your property. They have the authority to do that if you owe them money and they have filed the appropriate notices. The authority for the IRS to levy is under Section 6331 of the Internal Revenue Code. But before they can levy you, they have to give you at least a final notice of levy, Prior to that time, there's a lot of warning letters and threatening letters. We want you to pay this amount, or if you don't pay this amount, we're going to lien you or levy you. Those are warnings. You'll know that it's serious. You'll know it's a final notice of levy when they give you a right to appeal. You only get one right to appeal a levy one time, and so if that final notice has been issued in the past, that gets stale in 6 months, but that final notice is okay if they give you a warning. So if you've had a final notice in the past and that gets stale after 6 months, but if they give you a warning letter that they're going to levy you, take it seriously. I appeal the levies. They are appealable, and in the appeal, we can submit to the IRS either an alternative to collection, which is an offer in compromise, and that works most of the time for those who qualify. And if they don't qualify for an offer in compromise, we'll ask for an installment agreement. The IRS levy on a bank account is a one-time levy. So if they've hit your bank account and there's been a prior final notice of levy, they may not do it again, ever. It's just a one-time thing. The problem with levies is when they go after income. And a levy on income is a continuous levy. And if you're a business, a levy on a receivable is a continuous levy. So if they're levying a source of your income, receivables from your performing services and people owe you money, they can levy that source of income. So it's quite serious, because the levy on receivables is really a levy on gross income, and businesses can't survive if there is a levy on receivables. So sometimes there's a levy on income, and I get the calls, well, it's very important for you to know that the IRS will not do anything at all about a levy if you have not filed tax returns. So it's extremely important for everybody to always file your tax returns. Even if you don't have the money to file a tax return, I think you should file those tax returns, because if you don't file those tax returns, you're going to get a 25% penalty for not filing and a 20% penalty for underpaying your tax, but the non-filing penalty is not there if you file. So then you're only stuck with the underpayment penalty. They call it the negligence penalty. But that's the main thing that hurts me and my ability to help people when there's a levy. Now, if you have filed your returns and there's a levy, then the levy will normally be stopped if you file an offer in compromise, and the levy will normally be stopped if you file a request for an installment agreement. And so as quickly as possible, one of the best strategies is to start an installment agreement, even if you can't continue it, even if you don't plan to continue it, just to stop the levy. There's an important statute that I want you to take note of, and that's 6343 of the Internal Revenue Code. 6343 of the Internal Revenue Code, it says that the IRS cannot levy if it creates an economic hardship. I'll repeat that. The IRS cannot levy if it creates an economic hardship. That's 6343 of the Internal Code. Now, Congress wrote that statute, and the IRS is required to follow the statute. There's a big problem. The IRS ignores the statute most of the time. So when they ignore the statute, they're really breaking the law, but they get away with it. There's no oversight on this matter. The IRS does it. They are very aggressive on levies. And economic hardship is there if they're levying money income that you need for food, housing, medical care, transportation, court order payments, alimony, money that you need for health insurance, prescriptions. When you don't have the income for those necessary expenses, that's an economic hardship within the meaning of 6343 of the code, and the IRS is required. Now, one of the ways I enforce that by let's call it personal advocacy. The National Taxpayer Advocate will also help on those things. The National Advocate will, and there's an advocate's office in every state. They call them the local taxpayer advocates. In some states have more than one advocate's office. They will help on hardships. They have the authority to stop a levy, and sometimes the IRS revenue officers will not listen to them, will not follow them. But in any event, I would say in 75% of the cases, when we resort to using the advocate's office, they are helpful. The other 25% of the time, the IRS is just not following the law. They're just abusing their power, they're abusing their authority, and that's common. In any event, there's a lot of people that say, well, I'll stop a levy, and there's a lot of misinformation about levies on the internet, on TV, and people are very glib in saying they can stop it. Not an easy job. I think that you don't allow yourself to get into that situation by not appealing a final notice of levy. So the best way to deal with the levy situations is to make sure it doesn't happen. And to make sure it doesn't happen, you want to file your tax returns. If you don't have the money to pay for that, submit an offer in compromise or an installment agreement. Do not let it get to the point where they issue a final notice. If they do issue final notice, then that's appealable. But people just can't not ignore the IRS notices, and that's where there's the problem. So the levy situation can be avoided simply by making sure that if you don't have the money for your tax debt, then you file an offer in compromise, get into an installment agreement, but don't let the IRS go after your income. We stop them. Sometimes we stop them quickly. Sometimes it takes a long time to stop it. It's a difficult process. A lot of times it depends on the individual revenue officer for the IRS. Some of them are decent. Some of them are not so decent. And I would say most of the time we get difficult revenue officers who simply have it in for a taxpayer. They want that money. They want that collect. Their job is to collect. Their job is to not let people get into situations where they're going to settle their debt. They prefer to go after people and make those collections. But unfortunately, they cause a lot of harm. They cause a lot of damage, because when they create a hardship and people don't have money for food or transportation, it's in this economy. It's a horrible thing to happen, and I want to make sure it doesn't happen to you. Anyhow, if you have any questions about tax levies, please call me. You can reach me at 888-712-7690. You can contact me by email at ab@irstaxattorney.com. Thanks very much.